It is no secret that jobs in the oil and gas industry can be dangerous, but there are other factors that can affect workers' compensation risk, like the economy and the price of oil. We spoke with Bijan Bijarchi about trends in workers' comp during the IRMI Energy Conference in Houston. He is a VP at York Risk Services, a TPA specializing in claims management, managed care and risk management services. Here are the highlights.
The price of oil has a direct impact on claim frequencies in the oil and gas industry, and we are seeing a marked increase in claim frequency as a result of the lower prices that we're experiencing since 2014. I would say that what we have to be careful of right now as an industry is to be mindful of claim frequency and have an increased awareness of safety. But more importantly, when these new claims are coming in, I think that there's an automatic suspicion that some of these may not be on the up and up. What I think you will see are that there are some claims that have been perhaps not reported right away by injured employees that didn't want to say anything because they wanted to protect their job. So you have to be able to weed out the differences of those claims that are really valid versus those that may not be, because they're just trying to protect themselves and thinking that a claim is going to somehow sustain their employment. I think there's an aging workforce in the energy industry, and some statistics have shown that we have an aging workforce. 50% of the employees in the energy industry are over the age of 50. And another statistic that I just read recently said that 71% of geophysicists and the engineers in energy are retiring within the next 5 to 10 years. So we need to be looking at ways to recruit new talent in the industry so that we can sustain what we're doing and not lose a lot of the knowledge that is being walking out the door into the retirement pastures. So I think that's a big thing. I think there's two things a risk manager can do to analyze their exposures, two main categories. And the first is being out in the field, going out to your locations, understanding what your exposures are, not just from the location and the safety perspective, but also the culture, the morale. All of these things have a big impact on how your losses are going to develop over time. But secondly, once you've got those claims, you should really have an established practice of analytics. Every risk manager should have a robust RMIS platform that's easy to use so that they're more inclined to use it. And I think that risk managers should engage with their service providers, their TPA and carrier partners, to expect and demand the best in analytics with conclusions that are drawn, and trusting your service partner to make recommendations based on their experience.
For more of our coverage of the 2015 IRMI Energy Risk and Insurance Conference, visit the RIN TV On Demand Library.